It's Steve Paxton here, HARKO Day Trading. Just thought I'd do a quick video for all those trend traders, how to find the trend and have this particular indicator and these particular candles on your side. Help improve your trading. So come on, let's have a little look at what I'm talking about. So please share this screen so we can see. Right, okay. So as you can see now, we're on cable, pound, US dollar. And you can see here we're using Heikin-Ashi candles. On their own, they're pretty good. They're pretty good for finding the trend and trend reversals. But as a day trader, really, do you really want to see the 1 hour trend? Well, it's okay. But as a day trader, what you really want to understand is what's happening in 4 hour intervals. So you're chunking your trading day over into 3 or 4 different sections. And if you're day trading, you want to be in the market and out of the market in that day, maybe the following day, but generally in the same day. So what I'm going to do here is put up what we do. So what you can see here, this green bar, green indicator, this is the exponential moving average, not the simple moving average. A lot of old school, a lot of traders still use simple moving averages as day traders. They are too slow to actually, when you get down into the detail, they are too slow to give you the correct indication on trends. And we use the 200 EMA to understand where the trend is. I'll just get rid of this previous arrow there. So what we're looking for, good tip, when you see the 200 EMA on a 4 hour for the day, that is the indication that this market is bearish. And you should only be looking for ideally shorts if you are a trend trader, only shorts. So 200 EMA on the 4 hour. But if you look at the 200 EMA and you go down onto the 1 hour, you can quite clearly see where the actual pullbacks and the trades are. You know, market pulling back and the break of the 200 EMA, market pulling back, break of the 200 EMA, and so on as it goes along. If you move into the 15-minute, let's say, for instance, we can trade in the 15, and we do quite regularly. As the market's pulling back up, you are just taking the reversals. Markets pulling up, reversals and reversals. And this is good in not almost every time frame. If you go down into the 5-minute, and what you're doing is just looking for market pullbacks. Even into the 5 minutes, you can trade this particularly well. 200 EMA, very powerful indicator for day traders. Together with Heikin-Ashi candles, you can absolutely smash the markets with this, and we do every day. If you want to do a quick overlay on how to find out where the breaks are, well, put a little fractal in there, and every time the market breaks the red line, we go short, we go short. Very good way of trading. However, the 200 EMA is your friend as a day trader. So try it, put 200 EMA on your charts rather than simple moving average, and you just watch how your trading changes. Hope that helps. Cheers.